Hi everyone, I'm James Harte from littlefishfx.com and thank you for joining me for this week's live market analysis. So we have an important day tomorrow for the UK and the sterling market with the Bank of England September rate decision. Now, before we discuss the upcoming meeting, let's just quickly recap what we heard from the bank in the August meeting, which will give us some good context for expectations ahead of tomorrow's decision. So expectations ahead of the August Bank of England meeting were running high, with traders anticipating that the Bank of England were going to follow through on earlier signals and deliver easing measures. However, opinions were split regarding which measures the Bank of England were likely to use, with some looking for a basic rate cut, whilst others forecast more expansive measures, including QE. So to the surprise of many, the BOE eased across a range of channels in August. The headline cash rate, which stood previously at 0.5%, was cut by 25 basis points. Alongside this, 6 of the 9 MPC members voted in favour of expanding QE, which will now run at £60 billion over the next 6 months. 8 of the 9 MPC members voted to launch a corporate bond buying programme, which will run at £10 billion for the next 18 months. And finally, all members voted in favour of a term funding programme. So alongside these measures then, the BOE noted that the majority of MPC members actually expected to vote for a further cut in the future, though BOE Chief Carney noted that he is not a fan of negative interest rates and the lower bound for rates is close to a little above 0. Now, the BOE also noted that their economic outlook had weakened markedly following Brexit, and growth forecasts had been revised lower in 2017 from 2.3% to just 0.8%, and also in 2018 from 2.3% to 1.8%, with business investment and housing investment also expected to fall over the period. Inflation then was expected to pick up due to the weaker pound, forecast to be at 2.1% in 2017 and 2.1% in 2018, with measures intended to ensure that inflation won't fall below the target in the medium term. Carney referred to the stimulus measures as exceptional and said that by acting early, the Bank of England can reduce uncertainty and bolster confidence. So in response then to the easing measures announced in August, you can see that the reaction by the market was as swift and decisive as the central bank's action. Sterling was immediately down over 200 pips against the US dollar. You can see the daily candle here for the 4th of August. So sterling fell by over 200 pips that day. We subsequently fell another 200 pips. So we bottomed out at around minus 400 pips from the pre-August BOE levels. However, into mid-August then, you can see that sterling actually bottomed out, reversed and traded higher, and is now trading around the same level as it was at on the day of the August BOE announcement. So what has fueled this reversal in sentiment? Well, we had the BOE initiating a large easing program with clear indications that they expect to ease further, yet sterling is now trading back above the level that it was at before the bank announced its easing measures in August. Well, the key driver in this move has been a series of positive UK data recently. Now, many economists and analysts were forecasting that UK data was going to crater in the wake of Brexit, highlighting a sharp economic downturn, with many analysts predicting an immediate recession tied to Brexit. However, these extremely bearish forecasts have been continually confounded over the last month as data sets continue to surprise to the upside. So, to summarize data since the August BOE then, we had July CPI printing at 0.6% versus 0.5% expected on the headline and 1.3% versus 1.4% on the core reading. Alongside this, we saw UK manufacturing PMI data for August printing 53.3 versus an expected 49, whilst construction PMI data printed 49.2 versus an expected 46.5. Services PMI printed 52.9 versus 50 expected, with the composite PMI in August printing 53.6 versus 50.8 expected. Now, some weakness was seen in manufacturing production, which printed just 0.8% in July versus an expected 1.7%. However, industrial production remained firm at 2.1% versus 1.9% expected. August CPI then, whilst below expectations at 0.6% versus 0.7% on the headline and 1.3% versus 1.4% on the core, still remains firm and keeps inflation at its highest level since late 2014. The first earnings and employment data to account for the post-Brexit period was released today, and again we saw positive readings, with wage growth printing 2.3% in the 3 months to July versus 2.1% expected, whilst the unemployment rate remained steady at lows of 4.9%. So clearly a lot of positive surprise among these data sets, with UK manufacturing PMI hitting a 10-month high and the services PMI recording its biggest month-on-month rise in the survey's history. So with the UK's services sector accounting for nearly 80% of the UK economy, this rise is a strong sign that the UK economy has responded robustly to the Brexit development, warding off signs of the imminent recession that many forecast. Now, another factor that has lent cables support over the last month, or sterling across the board rather, is that of positioning. So short positions were at record levels into the meeting as investors piled in, expecting the BOE to drive sterling even lower. However, as positive data started to filter through post the August meeting, this extreme short positioning started to see some position squaring, leading to the bullish move in price which we've seen over recent weeks. With sterling short positioning moving from highs of minus 94,978 contracts on the 23rd of August to the current minus 89,969 contracts ahead of tomorrow's meeting. This also marks the first consecutive weekly reduction in shorts since the Brexit vote. So, looking ahead to tomorrow's meeting then. Despite the Bank of England's guidance in August that they expected further easing to be announced, the slew of positive data that we've seen recently has actually spurred an unwinding of markets' easing expectations ahead of the meeting, and those comments made in August are not thought to clearly and accurately reflect the bank's current view. With inflation holding steady at the highest levels of the last 3 years and PMI data sets rebounding strongly in August, it seems unlikely that the Bank of England would look to use up any of their remaining adjustment maneuvers at this juncture. So remember, Mark Carney noted that he is not a fan of negative rates, so effectively ruling out negative rates there, and also noting that the lower bound for interest rates is close to a little above zero. So with rates currently standing at 25 basis points, there isn't that much more room to move. So with data so far indicating economic strength, the Bank of England is likely to want to keep its powder dry in case these indicators start to turn lower in the medium term. Now, this meeting is also restricted in terms of communication channels, as it isn't one of the bank's Super Thursday events, and so we'll only see the decision itself and accompanying statement. With this in mind, it seems likely the bank will want to wait for further data to come in post-Brexit, and if any adjustments are to be made, most likely November will be the date that the bank have in mind. So to that end then, in terms of expectations for the meeting tomorrow, the BOE are likely to sound upbeat on recent data and the resilience of the UK economy post-Brexit, but likely to warn that should data warrant it, they stand ready to act. So in all, the meeting will probably be a neutral for sterling, with a little upside risk really, given the still extreme level of sterling shorts. So if the Bank of England fail to provide a catalyst for near-term weakness in sterling, then I think we're going to see a lot more position squaring here fueling a further upside move in sterling. So let's take a look at the live charts now then and see what opportunities we have ahead of the Bank of England meeting tomorrow. Okay, so kicking off with cable then, you can see that after forming that double bottom after the August Bank of England meeting, we've since reversed higher and we've traded up into the upper end of the range formed on the post-Brexit reaction high. And there are a couple of key patterns to point out here. So the first is you can see that price has been moving within this large contracting triangle pattern. You can see we have the trend line support here and trend line resistance. So price has been moving within this pattern, but we actually saw a false break to the top side. So you can see that we broke out above that bearish trend line. We then reversed lower, and you can see that just yesterday on that news that the August inflation report missed, you can see we actually broke down beneath this bullish channel which had been supporting price. So the technical landscape here seems to be suggesting there is room for a move lower. The false break of the contracting triangle and falling out of the support line of the bullish channel seems to suggest that there is room for a rotation lower back down into this bigger trend line support. Now, obviously, we have key structural support here at the late August lows, so at around the 130.65 level. So dropping down onto the 4-hour charts then, where we have an interesting technical development. If we do get a move lower into this area or somewhere around this support region, what I'd actually be looking for is a further rotation higher and one final high to sell into, which would actually give us a head and shoulders pattern. So you can see we have a potential left shoulder here, a head here, and then if we can find support somewhere here and make one final lower high, this could potentially give us a right shoulder, which we could look to sell into. So this will definitely be an interesting setup. And again, you can see that just yesterday, as we broke down through that bullish trend line support, we haven't actually yet tested that broken trend line. So at some point, I'm still expecting price is going to test up into this level to retest that broken trend line. And that's really going to be a key determinant in whether price can sustain and move back above that bullish trend line support and continue higher, or whether we are in fact going to trade lower and test down into this 130.60 region. Now, alternatively, if we do break higher tomorrow on an upbeat message from the Bank of England, and perhaps a sense that no more easing is forthcoming in the near term, then the key level for a topside break is clearly the break of the current September high at 134.51. So the current September high, 134.51, and then the high of July at 134.77. So this is a key area of resistance for sterling. And obviously, if we can break out above that level, then the area that traders should be looking to target is a move back into the pre-Brexit low at around 138.32. So going to be really key tomorrow to see what happens. Again, worth pointing out that with sterling short positioning remaining at such extreme levels, there is plenty of scope for more aggressive position squaring, which could fuel a move up into that 138.32 pre-Brexit low. Okay, looking at sterling Kiwi then. So sterling Kiwi is showing some interesting movement at the moment. You can see that just yesterday, price broke out above the bearish trend line, which had been running from the post-Brexit reaction high. So we broke out above that trend line. We've since come back down to retest it, and we're still chopping around at this level. So for now, this is a key pivot zone for sterling Kiwi. If price can sustain and move back above this trend line, then I'll be looking for price to continue higher. Alternatively, if we move back down convincingly within that trend line, then we need to be looking for a rotation back down into lows. So the key level to watch for a topside break then, if we do continue higher from this level, would be the September high at 183.78. And then beyond there, traders can look to target the previous key highs. So the August high, or is that late July? So the August high at 186.46, and then above there, the post-Brexit reaction high at 190.54. So depending on what happens tomorrow, if we get that topside break and we're able to take out the September high, then there seems to be plenty of open water for a move up to 186.46 and beyond there to 190.54. So another factor which is supporting sterling Kiwi at the moment is that the New Zealand dollar has come under a lot of pressure over the last week or so, as an uptick in US rate hike expectations has fueled an unwinding of carry trades held in commodity currencies. So heading into the FOMC next week, this could be a good trade to get into if the Bank of England is signaling that, if the Bank of England is on hold rather and doesn't really give a strong indication of any more easing to come, then we could expect sterling Kiwi to trade higher. And then heading into the FOMC, where it's not expected that the Fed is going to move on rates, but there is a very real chance that, in line with a lot of Fed commentary that we've had recently, the Fed does give more hawkish guidance of the likelihood of a rate rise coming before year end, which would weigh on the New Zealand dollar further. So if we do break out to the top side, be looking to get involved above the move on 183.78, targeting 186.46 and 190.54 after that. Moving on to sterling Aussie then. Okay, sterling Aussie, it's not as well as defined an opportunity. You can see that we're approaching key resistance here. So depending on what we hear from the BOE tomorrow, will likely determine whether we make a sustained breach of this level, or indeed the level holds as resistance and turns price lower. So you can see that we have the July high at 177.93. We also have the bullish channel resistance line coming in at roughly the same level. So if price does make a move up into this level tomorrow, it's really going to be key to see whether or not we can hold above it and start to make ground higher, or whether the area acts as resistance. So key thing with this chart is going to be watching the price action tomorrow on the back of the BOE. I won't be looking to get involved on any initial moves above this level, as I sense that what we might get is simply a low volume move up into that resistance level before a rotation lower. However, to the downside, if the BOE do deliver a dovish statement tomorrow, not expecting that they're going to initiate any more easing at this stage, but if they do give a strong signal that they stand willing to act, and perhaps some sort of timing reference indicating that they are looking at the November meeting as a situation where they could initiate more easing, then I'd be looking for sterling Aussie to break down out of this bullish channel. And the key setup that I'm actually looking at would be a move back down into this 170.33 region here. So you can see what we would actually have set up at that point is a potential inverse head and shoulders. We'd have a left shoulder, a head, and then a right shoulder. So if price can move down into that level and price action stalls, then I'd actually be looking at this as a good area to set longs, targeting a move back up initially to the neckline at 177.91, and then beyond there a test of the pre-Brexit low at 182.93. So again, this chart is a little way off from the setup, but it's worth pointing these out because we've had an absence of setups in this chart recently. And so on a medium-term scale, this is definitely a key reversal setup that I'd be interested in trading if we do see a move back down into that level and price holds. Okay, Euro Sterling then. Euro Sterling has been in tricky territory recently. Euro spent most of the summer hemmed in by dwindling ECB easing expectations, and the recent ECB meeting has prompted a further unwinding of expectations, with the ECB noting that they didn't discuss an extension of QE. So this fueled some Euro upside on news that the ECB hadn't discussed an extension of QE. However, with BOE easing expectations similarly fading, the pair has been struggling to make any decent headway. So you can see that we had an initial false break of the long-term bearish trend line. We moved back down below it. We've since traded back out above that, made another break, come back down, retested that broken trend line from the top side, and currently price has found support there. So for now, the technical suggestion is that we move higher. We've retested the broken bearish trend line, we've held, and now price seems to be making a move higher. So if the BOE backpedal on their earlier easing signals on their earlier guidance rather at the August meeting that they're looking to ease further, then tomorrow we could see euro sterling dipping back below that trend line. And if we do make a move down south, if sterling starts to ramp higher tomorrow and we see that extreme level of short positioning starting to be squared, then the area that I'd be really interested in watching would be a retest of the pre-Brexit high at 81.13. And you can see just below that, we have another really good area of structural support. So you can see we have all of these previous highs lining up at this zone, and then the pre-Brexit high sitting just above that. So this looks to be a really solid area of support. And if price does make a move back down to that level, then I'll definitely be watching price action with a view to looking to set longs, targeting a move at least back up to retest that bearish trend line. Okay, moving on to sterling Swiss then. And sterling Swiss, similar to what we're seeing across the sterling complex, with a move back up into the top end of that post-Brexit range. So you can see we put in the double bottom. We've since traded back up, retested the top end of the post-Brexit range, and have currently fallen back down. So for now, you can see that sterling Swiss is hemmed in by this bearish trend line running from the post-Brexit high. So you can see we had a recent test of that bearish trend line. We got a bearish pin bar and price has subsequently fallen back. So for now, it's really key to watch where we move on the back of the BOE meeting tomorrow. If we do get a breakout of this trend line, then it seems we're lining up for a test of the bearish trend line resistance here. And then above that, obviously, again, we have the pre-Brexit low at 134.12. To the downside then, the level to look at would be a retest of this double bottom low at 125.30, which would actually give us a triple bottom. So really depends on the quality of the Bank of England's forward guidance tomorrow. If markets get a sense that no more easing is forthcoming in the near term, then we're likely to see this topside break happen on position squaring. However, if the Bank of England choose to sound a little more reserved and cautious and give an indication that they are still intending to ease further if necessary, then we could see a move lower down into this level, and obviously ahead of the ultimate support at 125.25. You can see we do in fact have some really good interim support at 127.31. Moving on then to look at the sterling yen. And you can see sterling yen is still trading within that contracting triangle pattern which formed post-Brexit. So you can see we've got the bearish trendline resistance and bullish trendline support rather, which are acting as the outer perimeter for this range. So whilst we continue to move within this pattern, then I'm expecting that we do get a rotation lower down into that trendline support. Now, the Japanese yen has strengthened over recent sessions as the risk-off environment created by the uptick in Fed rate hike expectations has fueled safe haven inflows. However, investors are wary that the BOJ are due to hold their monetary policy meeting in just 2 weeks' time, and there is a chance that the bank will look to enact further easing. So for now, this chart remains in a key area whereby we're looking for either a breakout of the bearish trend line and a breakout above the September high to open a run up to the post-Brexit reaction high at 143.30, or a move back down into that double bottom zone at around 128.82 to 129s. So let's see what the Bank of England do tomorrow and where we go with this chart. Again, the top side break is above this level, and then the downside is below this level. And then finally, let's take a look at sterling CAD. So you can see that sterling CAD is currently sitting just under this trend line resistance of a very neat bearish channel that formed from the post-Brexit reaction. Now, notably, we had a test of this key symmetry resistance a couple of weeks ago. So you can see we formed a symmetrical swing there. Price initially stalled and rebounded lower. However, we failed to rotate back down into the bottom end of the channel, and we actually found support here and have turned higher once again. So for now, we're sitting just below this bearish trendline resistance, and it looks as if price has a little more to do to the top side. Now, obviously, we've got quite a thick layer of technical support here. We've got a raft of structural highs forming resistance, and we've also got this bearish trendline resistance. So depending on what we see tomorrow, it's seemingly going to take quite a positive and upbeat message from the Bank of England to give price the fuel that it needs to break out above that level. And again, as we're seeing across the sterling complex, if we do get a breakout above these local highs, then the region to target is a move back up into the pre-Brexit low at around 180.22 to 180.99. Now, obviously, the Canadian dollar, like the New Zealand dollar and the Australian dollar, is suffering at the moment due to the unwinding of commodity currency carry trades. So that is also supporting this pair. So again, any breakout above the current resistance, look to target a move back up into 180.22. Again, not expecting that we get downside tomorrow, but if we do get downside on the back of the Bank of England tomorrow, then the key levels to look for will be a break of rising trendline support on the H4 timeframes, and you can see we have a couple of key structural lows to use as reference markers before rotating back down into a test of the bearish channel support line. Okay, so I hope you found that session useful and that you're clear on positioning and expectations ahead of the Bank of England tomorrow. In the meantime, please feel free to check out the website www.littlefishfx.com, and you're interested in our daily trade ideas. They're currently up over 3,000 pips since we started them in November 2015. We're already up 100 pips in September, and there's actually a coupon here for 10% off the trade alerts as a thank you for joining today's session. You can also chat to our traders, including myself, in the live trading hub. And if you're interested in weekly exclusive strategy sessions with our traders, you can check out our recently launched Pro Trader package membership. Okay, so good luck everyone if you're trading tomorrow, and I look forward to catching up with you for the next session. Thanks now.